Welcome to Vexon, your daily window into the world of finance, markets, and innovation. Today is November 4th, 2025. From Wall Street to Silicon Valley, we decode the numbers that move the world. Stay ahead with the latest market trends, stock updates, and insights that matter. Because at Vexon, we don't just report finance, we redefine it.
Global crypto ETFs pull in a record $5.95 billion as Bitcoin hits new highs. Good morning. In a watershed moment for digital assets, globally listed crypto exchange-traded funds drew an astonishing $5.95 billion in the week ending October 4th. U.S. investors led the charge, contributing around $5 billion of that total. Bitcoin rose to a new all-time high above $126,000, with Ether and other major tokens also attracting significant flows. Analysts say the inflows signal institutional acceptance of digital assets as part of modern portfolios, even amid broader economic uncertainty. The strength in crypto is paralleled by safe haven demand for gold, as a weaker U.S. dollar and trade tensions weigh. Some warn of regulatory and valuation risks. Nonetheless, for the moment this is a big green light for crypto ETFs and the broader blockchain asset ecosystem. U.S. stock markets hit fresh records driven by AI stock surge despite government shutdown worries. Turning to equities, U.S. markets extended their record run this week, even while a potential government shutdown looms. The S&P 500 closed higher by 0.4%, and the Nasdaq composite climbed about 0.7% as investor focus stays on the booming artificial intelligence sector. A standout, Advanced Micro Devices, AMD, surged nearly 24% after announcing a major tie-up with OpenAI to supply compute power for AI infrastructure. Market strategists say the surge underscores how deeply AI is now embedded in investor sentiment, but caution it may be generating a bubble dynamic. Meanwhile, the shutdown risk appears muted, as investors shrug and double down on growth themes. The message, for now, risk appetite remains strong. Bank of England warns of an AI-driven bubble that could spark a global market sell-off. In a sober assessment, the Bank of England flagged elevated risk that the U.S. tech rally, fueled by artificial intelligence hype, may resemble the dot-com era, and could trigger a sharp market correction if sentiment turns. Their report emphasized how large U.S. tech firms now dominate equity indices, increasing concentration risk. While the bank still sees UK financial system resilience, the warning echoes globally. Investor exuberance around AI may overlook mounting structural vulnerabilities. For U.S. investors, the takeaway is to enjoy the upside, but be wary of elongated valuations and reduced diversification cushions. U.S. oil production record, Energy Information Administration forecasts 13.53 million BPD, warns of oversupply and lower prices ahead. Shifting to energy, the EIA upgraded its forecast for U.S. crude oil production in 2025 to a record 13.53 million barrels per day, up from 13.44 million previously. Despite this accelerating output, the agency warned that a swelling supply and subdued global demand could drive oil prices lower in the months ahead, projecting U.S. West Texas Intermediate, WTI, to average around $65 per barrel and Brent at $68.64. For commodities traders and energy sector investors, the message is clear: the era of elevated crude profits may be challenged. Lower prices could ease inflation pressure for consumers, but hit drillers and service providers. U.S. seeks to purchase 1 million barrels of crude for strategic reserve as prices slump. Continuing in the energy space, the U.S. Department of Energy announced a bid to purchase 1 million barrels of crude oil to replenish the nation's Strategic Petroleum Reserve, SPR. The move comes as oil prices are relatively low and inventories elevated, giving the government a window to top up at attractive levels. The SPR currently holds around 409 million barrels, and the buy-in is seen as part of a broader initiative to bolster American energy security under the current administration. For the market, this signals a subtle shift. While supply remains strong, policy layers are stepping in to manage long-term risk. Bitcoin rockets past $125,000 as ETF demand surges, market cap nears $2.5 trillion. On the crypto front again, Bitcoin surged to a new all-time high of around $125,449 on October 5, according to crypto market trackers. The move follows robust inflows into crypto ETFs and a rising view of digital assets as portfolio diversifiers amid economic uncertainty. Bitcoin's market cap briefly approached $2.5 trillion, placing it on par with major global asset classes. While the move excites believers that crypto is becoming mainstream, old-school analysts caution that the sharp rise still carries risk of a sharp reversal. For U.S. audiences, the message is, crypto is no longer fringe, it's commanding size and attention.